Okay, we are now streaming live to YouTube. So that way, this information will be available for us in the future and for anyone that's interested. And the importance of us meeting today is to find out more about down payment assistance here in Illinois. And we are so excited to have Rosie from IDA just here with us. And we also have the wonderful, the most talented realtor that you can possibly find. Say hi. You want to introduce yourself before we get started? Uh-oh.
Sorry, I was
There
unmuted.
you go.
There was some background noise. So hello everyone, I'm Jeanette Pacheco with Realty of Chicago.
Thank you. And I am Letitia Griffin with Guaranteed Rate, and we are here to talk with Rosie at IDA about the wonderful down payment assistance program that IDA is offering right now. There's so many different components, so many different options for people now, and that's the most important part. So we've got Rosie here. We've got some consumers with some questions, and we have eager minds, and we are waiting your knowledge. So Rosie, take it away.
Thank you guys. Thank you, Janet. Thank you, Tish. Thanks everybody for coming. So yeah, again, Rosie Burden. I am an account manager at IDA. So IDA is Illinois Housing Development Authority. So what we have is we have the funding for the different down payment assistance programs. We don't take the applications. We work with preferred loan officers such as Tish. She knows our program. She knows our guidelines. She actually has a funding. She handles it all for us. But we create the programs and we have the funding for the programs. So again, Illinois Housing Development Authority. Two new programs that I want to talk about today is the Smart Buy program and the Opening Doors program. So Smart Buy program has two pieces to it. It has down payment assistance and a student loan piece. Opening Doors only has the down payment assistance piece. As with all of our down payment assistance programs, they all require pre-purchase education. You can take that pre-purchase education through a HUD, housing counseling agency, or through an NIS approved agency. So once you're ready to do that home buyer education, Trish is going to tell you exactly where to go to. She has the information as far as who is approved to be able to provide that information to you. So first of all, I want to talk about the Opening Doors. So Opening Doors provides down payment assistance. So this down payment can go towards down payment or closing costs or a combination. It's a flat $6,000. With the $6,000, it has a 5-year forgivable lien. So what that means is if you stay in the house for 5 years, after 5 years, you don't have to pay it back. But if you refinance or if you sell before 5 years, you have to pay a part of it back, and it's all prorated. So it depends on the month and the year that you sell or refinance. Again, only if before 5 years. After 5 years, don't have to pay it back. All of our mortgages do come as a 30-year fixed rate. We don't have 15, we don't have 20-year, we don't have adjustable rates. All are 30-year fixed rate mortgages. So again, new program, Opening Doors, a flat $6,000. So the Opening Doors program is just being added to the existing programs that we have already. So one of the programs that we have available is the Access Forgivable. This one provides 4% of the purchase price up to $6,000 in down payment assistance. And it has a 10-year forgivable lien. I know you're probably asking, why do we still have it out there? But we have it out there because Opening Doors program is limited funding. We hope to have funding through next year on the Opening Doors program. So when that funding goes away, we'll have the Access Forgivable that's going to be still available. Again, $6,000, but it has a 10-year forgivable lien. So Opening Doors is definitely the better bet. Another program that we still have available is the Access Deferred. This one provides 5% of the purchase price up to $7,500 in down payment assistance. Now the thing, Access Deferred, it is deferred for 30 years. So what that means is that at some point you do have to pay back the full $7,500. Whether you refinance in 10 years, sell your house in 20 years, or if you keep the loan for the full 30 years, you will have to pay back the $7,500. The last down payment assistance program that we have available, it's called Access Repayable. This one provides 10% of the purchase price up to $10,000 in down payment assistance. It is repayable, so you are paying it back on a monthly basis. It has a 10-year term at 0% interest. So $10,000, 10-year term, 0% interest. That monthly payment would be $83.33 a month. So these are all the down payment assistance programs that are available. Once you talk to Tish and you're talking about how much you're going to need for your down payment, you'll discuss that with her, see which one's the best fit for you. Ultimately, it is your decision. But again, when you talk to Tish, you'll be able to figure out which one is the best bet for you. The next program I want to talk about is Smart Buy. So Smart Buy, this is the one that gives you that down payment assistance and the student loan piece. So 2 pieces. We will give $5,000. That $5,000 can help you with down payment or closing costs or a combination. The $5,000 is deferred for 30 years. So what that means is that at some point, that $5,000 you do have to pay back. Again, whether you refinance in 15, sell your house in 20, or keep your loan for the full 30 years, you'll have to pay back the full $5,000. Now, the second piece is that student loan piece. So the student loan piece, we will give you 15% of the purchase price up to $40,000 to pay off all of your student loan debt. So again, 15% of the purchase price that you qualify for. So if you qualify for a $200,000 loan, purchase price, sorry, a $200,000 purchase price, 15% of that is $30,000. So IHDA will give you $30,000. But if you owe $40,000, the only way you'll be able to qualify for the program is if you have access to the difference as far as what we're going to give you and what you owe, because all of your student loan debt has to be paid off. And everything gets paid off at the closing of the purchase of your house. So 2 things happen. You're buying your house and you're paying off all of your student loans. And that all this takes place as you're at the closing of the purchase of your house. So again, the only way you'll qualify for the program is that all of your student loan debt has to be paid off. So if you qualify for a $200,000 purchase price, 15% of that is $30,000. Let's say you have $20,000 in student loan debt. Well, we're only going to give you $20,000 to pay off all of your student loan debt. Again, if you only qualify for a $200,000 purchase price, we're going to give you 15% of that is $30,000. But let's say you owe $50,000 or $40,000. Let's say $40,000. Again, that $10,000 difference, it's your responsibility to bring that to the closing because all of the student loan debt has to be paid off. So let's say you have 4 student loans through U.S. Department of Education, 3 student loans through Nelnet, and 2 student loans through SoFi. Again, all student loan debt has to be paid off.
Wow.
Yeah.
I think this is like a really great program and it's one of my favorite. I think it helps a lot of people. So a couple of things that I wanted to make sure that people understand. Like if you feel like you have that $40,000 worth of student loans and you can qualify for a higher home price, that does help you in that instance. So if you were to qualify for a $300,000 home in that instance, and you know you have anywhere like let's say you do have $50,000 in student loans, And what Rosie's is telling us or letting us know, IDA will pay $40,000 worth of that off. Now you may have to come up with the other 10,000. Well, no, you do have to come up with the other 10,000 on your own because all student loan debt has to be paid off at time of closing. But if it means that IDA's paying off $40,000 and you just need to dig into your retirement for 10,000, it makes so much sense because we are all, carrying the student loan debt, and it's just be awesome to get rid of it this way. And it's not just like some people will say, well, I'm not going to pay my student loans. I'm just going to let them go delinquent, or I never plan on paying them back. It's still a debt and it's still there. But when you look at it this way, IDA's paying that debt off for you. So it's like it's a win-win. Even if I do need to go find $10,000 like out of my retirement, or maybe I have a commission check or coming into some money soon, this is the perfect way to take advantage of that. So
It can be a gift as well.
yes. If you have family members or someone, relatives that can gift you that additional 10,000, it's so worth it to get rid of that student loan debt. Because I know people are banking on like, well, my student loan debt, the government's going to do something about it. It's going to happen. We don't know that. All of that is just talk. But what IDA is saying is now it's real. It's happening. I've had clients actually close and have their student loan debts paid off. So this is amazing. Sorry, just adding in my 2 cents.
No, thank you. Yes. So again, and the other thing too, with that student loan piece, so the $5,000 has to get paid back at some point. The student loan piece. So let's say you're buying a $267,000 house. You have $40,000 in student loan debt. We're going to give you $40,000 in student loan debt. We pay off all of your student loan at the closing. You at the closing will sign a 3-year promissory note to IDA in the amount of that $40,000. So we pay off all your student loan debt at the closing. You sign this promissory note to us, 3 years, saying that if you don't refinance, you don't sell, don't move out for 3 years. After 3 years, that $40,000 is fully forgiven. I know it sounds too good to be true, but it is true. 3 years, 36 months, stay in the house, don't move, don't sell. After 3 years, whatever that student loan piece is, whether it's 20,000, 30,000, or 40,000, it's fully forgiven after 3 years.
Right.
So if you know anybody that has student loan that's looking to buy a house, tell them about this deal. I mean, here's the thing too. With this program, it is limited funding. That's the only thing. It is limited funding. We anticipate the program going through maybe July of this year. So again, if you're looking to buy, get on it. Call Tish, call Janet.
Yes, snatch it up soon because, like you were saying, with the 3-year wait period as well, that's not a lot of time for you to stay in the house. So that means IDA pays off your loans right away. But if you were to move or sell within that 3 years, you would have to pay something back to IDA. So what they're saying is that if you stay there for 3 years, you don't have to pay it back. There's
Right.
no additional balance, no extra charge, and those student loans that were gone 3 years ago are fully out of your life forever. So that's the best part. And I know we've been talking about this smart buy. Now, one thing that I see here, and I wanted to point on it as well, that right now smart buy is only available if you are doing a conventional loan. So when
Right.
you guys are looking at her PowerPoint and it says Fannie Mae only and Freddie Mac coming soon, that means that those are conventional loan programs. Not yet ready for FHA. Maybe that'll come down the line. We don't know. So I don't want to put that out there, but we do know it's available for conventional financing. So if you got questions about it, feel free to reach out.
Yep. Yeah. So again, it's only conventional. We have reached out, like Tish said, we reached out to FHA. We're still waiting for them to respond to see if they're going to accept the program. But right now it is only conventional financing. So yeah, if you're looking to purchase, call Tish, call Janet, get that going.
Great. All right. Can you repeat the 600 one that you have to? Okay. Just so you know, with all of IDA's programs, you do need And I do recommend that you take a home buyer education course. So home buyer education courses, sometimes there's a charge for it, but I do have some programs available. I can let you know what they are. And whether you go with IDA or not, always recommended to take a home buyer education course. But that's why they want to make sure that you know what you're doing when you get into home ownership. So they offer it and say that, hey, if you want this assistance, then you do need to take a home buyer education course. So I think she wants to talk about the opening doors and the IDA access 4%. So can you go back to the opening doors?
Yeah, she's asking about the opening doors, and
There we
she's wanting to buy something like in Illinois, because it's a whole Illinois program.
Yes.
Yes. Yeah, so again, opening doors, it is a flat $6,000. That has the 5-year forgivable lien. So again, stay in the house, don't move, don't sell. After 5 years, that $6,000 is fully forgiven. Don't have to pay it back.
And the reason why it says like the $6,000 flat, because some of the programs, they are
Playground over there.
and someone I can hear some feedback from someone, but
Does somebody have a question?
That little stand right there. You see that little stand? There's a stand right there.
okay.
Yeah, let's see what they have. Over there
All
now.
right. So with the opening doors program. Uh-oh.
I think
Okay.
Does Mr. Scott have a question?
Someone's unmuted.
Yeah, let's see.
Okay.
Very good.
What? Oh, give him his water.
Let's see. Hold on one second.
So again, yeah,
Hold on.
with the $6,000, a flat $6,000, this program, all of our down payment assistance programs can be layered with an FHA, USDA, or any type of conventional financing. That's all of our down payment assistance programs except for Smart Buy. Smart Buy can only be combined with conventional financing, but all of our other down payment assistance programs, you can go FHA, rural housing, or conventional.
And I wanted to point out the difference with this one and the IDA Access as well, because the IDA Access 4%. Now it says 4% up to $6,000. So that's a big part that I want you to pay attention to. So with the opening doors, they just give you $6,000. With this one, it's actually based on the purchase price. So that 4% means 4% of the purchase price they will give you as a down payment assistance.
Yeah.
Up to $6,000.
And another key thing, again, the opening doors, it's 5 years. Stay in the house for 5 years. After 5 years, it's forgiven. Access forgivable is 10 years. You have to stay in the house for 10 years, and then it's fully forgiven. So yeah, opening doors, definitely, flat 6,000, 5 years. Access forgivable is up to $6,000 forgiven in 10 years. But yeah, and like I said, talk to Tish. When you go in, she'll explain everything. She'll let you know what the best route for you is.
Definitely.
So I do want to mention, as with all of our down payment assistance programs, we do ask for a minimum credit score of 640. All of our down payment assistance programs, as Janet mentioned, they're available in every county in the state of Illinois. It has to be for the purchase of a primary residence owner-occupied property. So it cannot be for investment property or rental property that you want to buy. It's a house that you're going to be living in. All of our programs are available to first-time buyers or non-first-time buyers. So you do not have to be a first-time buyer. So if you currently own a home and are looking to sell and buy a new primary residence owner-occupied property, you can use the IDA funds, even the Smart Buy. So again,
a lot of people think that there's just for first-time home buyers, so it's great to point that out too.
Yeah. And again, you can currently own a home, be selling and buying a new house. And if you have that, if you have to sell and buy a new house to use that Smart Buy program, I mean, it's available if you really need it.
So we've got another question, Rosie. Ready for it?
Sure.
Okay. Are Parent Plus loans included in the Smart Buy? Can someone pay those off with the Smart Buy?
So good question. And unfortunately, they cannot be paid off. The student loan has to be for the education of our borrower, and that loan has to be in our borrower's name. Now, if the student loan is in the borrower's name and the parent co-signed for them, those can be paid off. But the Parent Plus loans, usually just in the parent's name for the education of the borrower, those don't qualify, unfortunately.
Thanks so much for clarifying that. A lot of people have questions about that too. So,
Yeah. So we do ask that you have at least $1,000 in student loan debt from a qualified source. And it says no private loans, but a private loan is more like a personal loan. So let's say you went to the bank and you took out a $10,000 personal loan for your education. Those won't count. It has to be a student loan. So again, you could have gone to SoFi, you could have gone through a bank and gotten your student loan. So long as it's a student loan and your credit report's gonna note that, all those can be included to be paid off.
and IDA pretty much uses the credit report to make sure that a lot of the information that we as lenders give them is true as well. So if you are questioning that, you don't know whether you know you use the money towards your education, but you're not sure if it's an actual student loan or it will qualify, that's the way to check it. Look at your credit report and see how it's reporting. So,
Yes, yep. Another thing that we ask is when you apply that your student loans be current. If they're in forbearance or deferment, we consider those as current, but you can't be late on your student loans, unfortunately, or in default.
and if you are in default and need help with that, feel free to reach out. That's what your loan officer is there to help you through. Not to tell you, well, to help you through it and fix it and get things back current.
Yes, yeah. And then you can apply because at the time of application, so maybe you might talk to Tish and you might have to work things out, do a little bit, paying on something. And then once it gets current, that's all we want it to be is current. Go ahead and apply then.
I have a question for Tish. So like say someone doesn't have enough credit or doesn't have any credit at all. And they would want to get a loan with you for a home, for a first-time homeowner. What are your recommendations for that person?
Well, there are a lot of things that you can do. First, we need to take a look at where your score is right now. It could be that you don't have a score reporting. There's nothing there. It could be that you feel like your score is too low. We know for IDA you need a 640, but I can actually look at your report. We can come together and put like an action plan together on what you need to do to get your score up. And I can tell you about how many months that it'll take or how many weeks or what you need to do so that it starts reporting right away. So there are things that you can do to get that done. So just reach out.
And then another question. So like say someone is an independent contractor, they don't receive actual paychecks every 2 weeks. They're independent contractor. Is it okay just to use like their W-2s that they file every year to be able to show proof that they're getting some type of income so then they can later on get approved for a loan?
That's a good question too. So with that, we do need to look at your income. We have to show that you have stable income for at least 2 years. So it's about looking at everything that you have going in, and everybody's situation is unique and different. And typically when people look at the down payment assistance programs, we're thinking, W-2 employee, steady income, that sort of thing too. But if you feel like you're self-employed, you're contracted, there's other ways to show your income. So we just need to sit down and look at what you have, and then we can see what you qualify for. So.
Okay. Thank you.
You're welcome.
Great questions.
So a couple other things as far as IDA, we do have a couple of requirements. One is we do have income limits. So income limits are based on the county that you're looking to buy in. So for the Cook, Lake, DuPage, Kane, McHenry, and Will counties, if you're buying in one of those counties, the income limit, and it's the income limit of combined income of everyone that's going to be on the loan. So the income limit for the Cook, Lake, DuPage, Kane, McHenry, and Will counties is $109,200. So $109,200. Again, that's a combined income of everyone that's going to be on the loan. If you have household members, so let's say you have an 18-year-old child, has a part-time job, but is not going on the loan, we don't care about their income. It's only the income of those that are going to be on the loan. Cannot be more than 109,200. And then
And that's
another
monthly, and that's a monthly, you're saying that monthly or a yearly?
yearly, $109,200.
Okay.
Combined income from everybody cannot be more than 109,200 annual income. We also have purchase price limits. So again, for the Cook, Lake DuPage, Kane, McHenry, and Wool counties, the purchase price on a single family home cannot be more than $326,781. So if you come in with a contract in the amount of $330,000 and you want to put that $4,000 difference to get it down to that $326,781, you won't qualify. The contract, the purchase contract cannot be more than $326,781. And
Not
that's for-
327.
right.
And then now, because I know not many people will buy out of the city, but like say someone is buying out of the city. I'm one of the persons that bought out of the city in a rural area. Like in the rural areas, what are your limits in those type of areas?
It depends on the county. Do you know what county?
Yes, like Bureau County, Lee County, LaSalle County.
That should be 294. I know LaSalle is 294,600. And then the majority are 294,600. And then it's either 294,600. You said LaSalle, right? So LaSalle, Lee, both are 294,600.
Yeah. So I'm like more like Bureau, Putnam, Marshall, like those type of, yeah, like I'm close to Lee and LaSalle too.
Yeah. So we have the breakdown, and I know Kendall County is different. So it's going to be Cook, Lake DuPage, Kane, McHenry, Will. I think it's McLean County, Winnebago, Kendall, and then all other counties. So those, I think the majority are going to be that 294,600.
294. Okay.
But again, if you have any questions, Tish will be able to give you the exact amount. So, give her a call and she'll be able to tell you what for that county that you're looking for, she'll be able to tell you what the purchase price limit is.
Okay.
We could always run the address, and with the address, we could look up the counties and Tish will
Okay.
let us know.
Yeah.
Definitely.
So again, this is for a single family, a townhouse, or condos.
What if I wanted to buy a 3-unit or 4?
So unfortunately, not a 3 or 4 unit, but we do allow for 2 flats. So we allow for a 2-unit. Again, purchase of a primary residence owner occupied property. So you have to live in one of the units, but we do allow for the 2 flats. But unfortunately not 3 or 4.
Right. And the main reason bringing that up is that a lot of these programs are to assist first-time home buyers. Now, of course, they do assist people that are not first-time home buyers, but the main thing is that you are the home buyer, not an investor. So when you think 3 and 4 units, that's typically getting into the investment world, investment income, that sort of thing. But 1 unit, condo, 2 units even are allowed. So this would be a great program to take advantage of.
Yes. And again, these income limits, these purchase price limits, all these requirements are for the Smart Buy program and all of our other down payment assistance programs as well. So as Tish mentioned, the Smart Buy program is only available with conventional financing. All of our other down payment assistance programs like the Access Forgivable, Deferred, and the Repayable, and the Opening Doors, those you can combine with FHA, VA, rural housing, and conventional. And it's only the Smart Buy that can only go conventional. And then as I mentioned, all of the student loan debt has to be paid off. Everything gets paid off at closing. One last scenario that I want to mention. So again, it's 15% of the purchase price that you qualify for. Let's say you qualify for a $200,000 purchase price, 15% of that is $30,000. So let's say the borrower has $10,000 in student loan debt. The co-borrower has $30,000 in student loan debt. You have the option of paying off one or the other, but it has to be all of one or the other. So you're getting $30,000, the co-borrower owes $30,000. Go ahead, pay off the co-borrowers all of their student loan debt, leave the borrower's student loan debt, continue making payments on that. Tish will include that in your debt to income ratio. We could just leave it alone. You have $30,000, pay off all of the co-borrowers $30,000 in student loan debt. Okay. And again, there's so many different scenarios. Tish will be able to explain once you sit down with her, she'll figure out which the best program is and which route is the best route to go.
Anyone have any other questions right now for Rosie?
Yeah, so with that, no need to adjust your camera or your screen. That was me a year ago. Now this is me now. No more dying.
Well, it looks good, so I
looks
love
really
it.
good. I love it too.
Thanks, thank you. So again, these are the different down payment assistance programs that we have available. Again, all are available in every county in the state of Illinois, to first-time buyers, repeat buyers. It is purchase transactions only. We don't have any refinance option. So these are all the programs that we currently have available. Does anybody have any questions on the down payment assistance programs? Because I also want to mention, so this is the down payment assistance programs. I also want to mention IHDA, so Illinois Housing Development Authority, if you know anyone. Coming in May, I think mid-May, we are also going to be administering the Emergency Rental Assistance Program. So if you know anyone that needs rental assistance, maybe laid off or underemployed due to COVID, definitely check our website. Our website for the emergency rental assistance, it's IHDA, so IHDA, so it's IHDA.org, or email me or get a hold of Tish, or actually just email me for the rental assistance. You can email me or give me a call. So again, if you know anyone, that rental assistance program is going to be rolling out mid-May. We might also have a mortgage assistance program. So we had the mortgage assistance program and the rental assistance last September. We're getting a new allotment of money. I do know that we are administering the rental assistance. Not really sure on the mortgage assistance, but again, keep checking the website. Starting like in next week, which is May, starting in May, all the updates will be on the website. So if you know anyone, have them apply. It'll definitely help, whether it's emergency rental or emergency mortgage assistance. Again, it's being administered through Illinois Housing Development Authority, and we want to get the word out to anyone who needs any help that way as well.
I definitely want to get the word out for that too. I feel another video coming on for that, Rosie. I'm just letting you know, because
I think so too.
guys, there are some people that I know personally that were actually helped by the rental assistance last year. So definitely want to devote some time towards that so that people know about it.
Yeah, for sure. Definitely.
All right. Well, I think we are finishing up here. We appreciate you joining us this evening. I am going to stop the live stream and then we can continue on. And let's see.
Well, thank you guys. Thank you guys. Thank you everybody for joining. I'm glad everybody wants to get this information. So again, the Smart Buy is limited funding. So if you haven't know anybody, tell anybody that that has student loans, tell them about it,
Yes, especially before it goes away. We want to get the word out and soak up all the money that we can.
Exactly. And so as far as the other down payment assistance programs, the down payment assistance programs will be there forever. It's just that Smart Buy program with very limited funding. So if you are interested in that program, definitely apply and get the ball rolling on that.
And before I stop this though, just wanted to mention, how long has IHDA been around?
So we've been around since 1967. So since 1967, we have been providing different down payment assistance programs. We always have funding. It's just that the program is always changing, but we always have some type of down payment assistance program. All of our the majority of our programs have always been available throughout the state of Illinois. There were some programs that were limited to some counties specific, but we still had down payment assistance that was available to all other counties in the state of Illinois. But we've always had funding, and again, different down payment assistance programs that we've had, different variations, but always available throughout the state of Illinois.
Awesome. So basically, IHDA is not going anywhere. They're going to be here to help us, to help our children, our friends, our neighbors, our children's children, and they are not going anywhere. They just keep getting better. So
thank you.
Thanks for
Yeah.
joining.
Yes, and I've had a lot of the people here today. They were very interested in the Smart Buy program because they've had either some loans in the past or have some loans today. So that's why Rosie, I met her a while back ago, pre-COVID.
Yeah.
So I am like Rosie, and Rosie and I have a story because I'm like, who's these IDA people and what is going on with them and what do they have to offer?
Right, right.
So Rosie's just, like I said, a plethora of information. I'm always trying to,
Thank
get everybody who knows me, I'm always trying to get the consumers whatever I can so they can just get the most for whatever they can get for so they don't have to put any money down if they don't have to. But any money doesn't exist in our world, at least some money, but at least get a little bit of down payment assistance or closing or whatever we can help them with. And Tish, I really loved your vibe, and like I said, you just seem like a person who loves to help the community, just like Rosie and myself. So I think that with all this information that you're providing and Rosie's providing, I think we can do something. So I do have some people on here, so Tish, I'm going to refer them over because they are ready to get started and get the ball rolling, and so I'm going to refer them over to you.
Thank you. I appreciate that. Thank
You're
you so
welcome.
much.